In this episode, we are going to look at the preparation of financial statements at the end of the accounting period after adjustments have been completed. Recall that the company prepares a trial balance, which is really just simply a worksheet used within the accounting department to ensure that the accounting system is in balance. A trial balance was prepared when the company was done recording their regular business transactions. There was one more step that we have now learned that needs to be done prior to the preparation of financial statements, and that is the recording of adjusting entries. After the adjusting entries were recorded into the general ledger, all of the account balances within the general ledger are what we call adjusted balances, meaning all of the accounts have been adjusted to reflect all transactions during the accounting period. Thus, we prepare one more trial balance, and that is the adjusted trial balance. The only difference is these accounts are reporting balances after adjustments have been made. It's prepared the exact same way as the first trial balance, and that is to report all accounts within the general ledger and list them in the appropriate column as to whether they have a debit balance or a credit balance. If the total debit balances equal the total credit balances, it's an indication that the system is in balance and we're ready to prepare the reports. So the first report prepared is the income statement. The income statement reports the revenues and the expenses. The next statement that is prepared is the statement of retained earnings. The statement of retained earnings is reporting the change in retained earnings from the beginning of the accounting period to the end of the accounting period. Recall that the net income that is calculated in the income statement is carried forward to the statement of retained earnings. So beginning retained earnings plus net income less dividends paid gives us our ending retained earnings. Finally, once we have the statement of retained earnings prepared, we are now ready to prepare the balance sheet. Recall the balance sheet reports the total assets, liabilities, and ending equity. A couple of things are a little bit different here. We are still reporting the retained earnings from the statement of retained earnings and carrying that forward to the balance sheet. The only other difference that we didn't have previously when learning how to prepare the financial reports are contra accounts. And if you recall, contra accounts are like a dog on a leash. Wherever the account it is tied to is reported, that contra account is reported immediately following. So equipment and its contra asset account, accumulated depreciation, are reported together on the balance sheet. Here is the equipment less its contra asset balance to reflect the book value. Balance sheet hasn't changed. It is still reporting total assets, liabilities, and ending equity.